welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi.
And well done for muscling your way through the traffic this afternoon.
Yeah,
Kudos.
what a task. What a task. And I shudder to think what all this load shedding is doing to this economy.
Yes.
It's just absolutely unbelievable.
Well, we're not going long the SA Inc., if you like, this evening, but we will get to that in a moment. And we're going to start off by talking about the S&P 500, which has actually broken through 2,800 points, and that was kind of the key sticking level. And it didn't fail at that hurdle. It actually sort of quite easily surpassed it.
Yes, that's right. So we've been going on about this for a number of weeks now because it has been bumping up against this resistance zone at around about 2,800. The actual level is 2,815. That's where you join all those highs from October, November last year, and then we're bumped up against that zone again in February now. So it's actually managed to push out through there, and while we're sitting here now, the futures are pushing up towards 2850. So it has broken through, and we did say last week and on the week before that it just seems a little bit too obvious that this 2800 zone is there, it's resistance. Everybody is drawing that same trend line in that I've drawn there. And
with a view to short it.
Yeah, with a view to shorting it. And you just sort of think, it almost seemed inevitable that it was going to squeeze the shorts out. Because the market often, when something seems too obvious, then often it'll surprise you, which is what it's doing here. So it does appear as if the shorts are going to now start to squeeze a little bit and they're going to battle with this market moving higher. But just following on from that, what I do want to point out is something that's interesting around about this time of the year. Now, this is also the S&P 500. It's a daily chart going back over the last 18 months or so. And what I specifically want to point out is when you get the start of quarterly earnings season. Right now we're approaching the end of the first quarter of the year at the end of March, and you'll find that your US quarterly earnings season comes through in about middle to late April is when earnings season starts. And typically there's a 4-week period before a company reports results that it cannot embark on any share buybacks.
Yeah.
Now, it's been quite widely publicized that the participation in this rally that we've seen over the last 3 months has not been very broad, and that it's been, and there's actually been not a huge amount of accumulation, almost even some evidence of reduced positions actually in US stocks, which makes me think that it's largely been driven up by share buybacks, which has been the case over the last number of years. We've seen a huge number of share buybacks in the US, which has been propping up the US market to a certain extent. Now, those blue arrows on the chart here indicate the start of a quarterly earnings season at each point during the year. What's interesting to note is what happens in the 4 weeks before the quarterly earnings season starts. And in most cases, you'll notice that the market has actually been a little bit soft going into earnings season after having had a fairly strong push up in the months before that. The only one that really where there was an exception was in January of 2018 and what happened just before that. Other than that, for the prior 4 quarterly earnings seasons, or the lead up to the quarterly earnings, has actually seen a little bit of softness in the market. So if we believe that that type of theme could potentially unfold again, then I would be a little bit careful of just chasing this breakout on the S&P 500. You may very well see something similar where it actually just drifts a little bit softer in the month, in the weeks now leading up to the quarterly earnings season.
Yeah. Okay. So maybe pull back even below 2,800.
Possibly, yeah.
Garth, what about our own market? What then what impact might that have? Because we are just kind of nudging our way ever higher.
We are nudging our way higher. So here's our top 40 spot index at the moment. And what's still very clearly evident is this upward trend that's been intact since December. It's an upward channel. And it seems as if we're probably heading up towards 51,000 or even a little bit higher here based on this channel. I think the weaker rand is also helping. We are seeing the rand weakening a little bit, and that helps the currency sensitive stocks, so the likes of your Naspers, BHP Billiton and Richemont, etc. Those will continue to push up. So that's what it looks like on our top 40. Look, obviously if the S&P 500 were to have a meaningful pullback in the next little while, we won't escape that entirely, but we also do have our own characteristics that are particular to South Africa. Just following on from that, this is the top 40 futures daily chart, which is really very similar now to the top 40 spot chart because we're approaching the futures closeout. In fact, tomorrow is the futures closeout, so you'll find that your futures price and the level of the spot market actually trade almost at parity now. And again, here you can see that upward channel that's evident, and it seems as if the market could gradually grind its way up into that 51,000, maybe 51,500 sort of area.
I mean, there's also a couple of big events this week. I mean, you mentioned the futures closeout, and that's being held tomorrow because normally it's on a Thursday, but Thursday, of course, is a public holiday in our own market. But you've also got the Fed meeting. And then we have Tencent results out this week, don't we?
Yeah, so that's right. I mean, it's an interesting week from that point of view. You're right. The futures closeout is a big liquidity event tomorrow on Wednesday, and there's quite a lot of optionality around the 50,000 area on the top 40, but we seem to have pushed through that, and part of that could be attributed a little bit to some futures buying to hedge some options positions through that 50,000 strike level. Then, of course, the FOMC meeting tomorrow night. No interest rate change is expected, but obviously what the market will be focusing on very much is the commentary, what Jerome Powell says about the economic growth in the US and globally as well, and also what that might mean for the trajectory of interest rates looking forward. The market largely now seems to be expecting that they may have seen the last rate hike in this cycle. If there's another one, it might be maybe one more hike later in the year. But certain predictors are even looking forward to the possibility that the next move in US rates is actually going to be down. So I suppose it's going to depend how hawkish, how dovish he is. He's not going to be hawkish. We can say that with certainty. He's not going to be hawkish. He might be dovish. He certainly has been taking a more dovish tone over the last couple of meetings. That's those two, and then of course we do have Tencent results, which will be published on Thursday when we're on a public holiday. So what it means is that when we come into the market and open up on Friday, we're going to have to adjust for whatever happened post the FOMC meeting on Wednesday night, and if there's any surprise in the Tencent numbers on Thursday, we'll need to adjust for that. So you could potentially come in on Friday and see our market either gapping up or down quite meaningfully.
So in other words, don't take any big positions unless you're very convinced of which way it's going to swing.
Yeah, particularly on the top 40 and again in Naspers, because you're going to need to be very convinced one way or the other.
Yeah. Okay. So that is the bigger picture of the markets, and you are initiating a trade this week. And I noticed that you left out resources stocks when you were talking about the rand sensitive stocks, and in fact resources have been they have just been on a fabulous joyride this year, thanks in no small part to the palladium price, and of course Sibanye Stillwater is a huge player on the palladium price, and you're going long of this stock.
Yeah, that's right.
Again.
Correct. Yeah, it's been a good stock to us last year. We one of our most successful trades of the year last year was actually that spike in October that we saw on Sibanye Stillwater. We managed to participate in that, and that paid good dividends for us in last year's show. So it has been a stock that's provided plenty of nice trading opportunities over the last few months as well. It's very liquid and it does move around quite a bit. And like you said, the resources space, and particularly the platinum and gold space, is where the real momentum has been in our market, at the expense of all the domestic areas which have not been particularly interesting to play in. The platinum miners and the gold miners have been very strong, and of course Sibanye Stillwater plays in both of those spaces.
Yes.
And what I've identified here is the sort of falling channel. It's almost a flag pattern that is evident on this chart over here. So it's been moving higher, then it's consolidated nicely into this flag pattern over the last couple of weeks, and it's beginning to break to the upside. We bought this yesterday, being Monday. I did flag it for Traders Corner subscribers on Friday last week and again on Monday this week, suggesting that it was looking as if a breakout is coming here and that it could push back to those prior highs and possibly even beyond those prior highs. So we've gone long at 15 Rand 20, using a stop loss at 14 Rand 50, and a target here is the prior high, which is 16.50, but you can't rule out the potential that it goes beyond that, especially if the Rand weakens, and it does appear the Rand's weakening a bit at the moment, which is likely to help propel this stock a bit higher.
Garth, before we get into the mechanics of the trade, I could quibble and say, why didn't you buy this thing in January?
Yes, why didn't we buy it in January?
With the benefit of 2020 hindsight.
Because you weren't here to prompt me to do that. I'm going to blame it on you.
Okay, fair enough. Mind you, I'm a contrarian indicator for most shares, so don't listen to me. All right, so take us through the mechanics of that trade.
All right, so we're long at 15 Rand 20. The stop loss is 14.50. Risk per share is therefore 70 cents. Risking 1.5% of our capital. So if we take our total South African portfolio, which is about 150,000 Rand. 1.5% of that is 2,250 Rand. That means that's how much money I'm willing to lose if this trade doesn't work out for us. I take that capital risk of 2,250 and I divide it by the 70 cents per share that I'm risking. So it comes out at 3,200 CFDs, basically, is what I'm rounding it off to. And that's what we've bought for the portfolio for this week. The target, as I said, is 16 Rand 50, and it means that our risk to reward ratio on this particular trade is 1 to 1.85. And that's assuming we go to that target of 16.50. If it continues to push out beyond that target, well, then obviously our risk to reward ratio could improve even better.
Yeah. And would you look to hold on?
Potentially. You know, what we did do with Sibanye last year was we actually tried to run that profit and allow it to go beyond our target level, and it actually worked out fairly well. Yeah. So what we'd potentially do is the same thing here. Okay. Maybe run a trailing stop loss if once it's reached our target level.
Yeah. Okay, so that's the trade that you've entered into. And then also you do want to flag very quickly the chart of Tencent.
Yes, just interesting because we've got Tencent results coming up on Thursday this week. Let's have a look at the chart and see what it's saying. What's notable here is that we had this large inverted head and shoulders pattern that formed between September and December last year, and it broke out above the neckline there in January. Now that points up to a potential target of $400, so that's still a bit higher than the current trading level. If we add a bit more analysis, our 50% retracement comes on in about where it is now, and our 61.8% retracement is at about $390. And then lastly, there is a bit of resistance in this area at around $380. These are Hong Kong dollars, by the way. Yeah. So let's see what happens. What I'm saying is I think the stock has potential to push a little bit higher, but it is getting into an area where it might be logical to expect some sort of consolidation if it gets into this area and then starts to stall after the results.
Okay, well, as you said, the results are coming out on Thursday, and that's going to have a big impact on Naspers, obviously, on Friday. Yeah. So lots to watch this week. Garth, having said all that, what do the portfolios look like at the moment? Right,
so our South African portfolio is almost back to the starting point now with the profit that we're seeing on Sibanye so far. So that's helping. And offshore, we have no change there. We're still down 1.3% for the year to date. And I'll continue to look for an opportunity there. It's early days in the year. Yeah.
And then just to end off with a reminder that viewers can get a weekly alert from you.
Yes, if you go to traderscorner.co.za and go to the middle of the page, you'll see there's a link there for a free weekly email. If you click on that, enter your details, it won't take long. Then we'll send you an email every Tuesday at lunchtime detailing what is coming up on this show for the week.
Great. Garth, we leave it there for you to battle your way home in Johannesburg's notorious traffic. And that is where we leave Traders Corner. Thanks for watching.